Canada's housing market has been one of the most dynamic and controversial sectors in the country over the past decade. Skyrocketing prices, bidding wars, and historically low mortgage rates created an environment where homeowners felt wealthier by the month, while buyers struggled to even enter the market. But as we move further into 2025, experts are calling it the Great Reset, a period where home prices, after years of surging, are stabilizing or even correcting in certain regions. This reset isn't just a trend, it's a fundamental shift with implications for buyers, sellers, investors, and policymakers alike. Why the reset is happening? Several factors are driving this change. Interest rate hikes. The Bank of Canada's repeated rate increases over the last few years have made borrowing more expensive. Mortgages that were affordable just 2 years ago now carry significantly higher monthly payments, cooling demand in previously overheated markets. Rising inventory. After years of scarcity, more homes are hitting the market in major cities like Toronto, Vancouver, and Calgary. Increased listings mean buyers have options, reducing the urgency that once drove prices higher. Affordability pressures. High home prices relative to incomes are pushing more Canadians to consider alternatives, smaller cities, condominiums, or even rental markets. This shift is naturally moderating price growth in urban centers. Policy interventions. Measures such as foreign buyer restrictions, stricter mortgage rules, and incentives for first-time buyers have started to take effect, dampening speculative demand. Economic uncertainty. Global economic concerns, inflation, and job market fluctuations make buyers more cautious. The mindset has shifted from must buy now to wait and see, contributing to slower price growth. Regional variations in the reset. While the national narrative talks about a reset, the reality is highly regionalized. Toronto and Vancouver. These markets are cooling but remain high by historical standards. Sellers are reducing asking prices slightly, and bidding wars are less intense, but scarcity in desirable neighborhoods keeps prices resilient. Calgary and Edmonton. Alberta cities are seeing a more pronounced reset. Years of oil price volatility have affected local incomes, and higher inventory is giving buyers significant leverage. Atlantic Canada. Cities like Halifax and St. John's continue to see growth as remote work trends encourage migration from larger urban centers. Here, the reset may appear mild or delayed. Secondary cities and suburbs. Smaller markets, including Kelowna, London, and Winnipeg, are benefiting from affordability migration. Demand may keep prices steady, or even increase slightly in these regions, despite the national cooling trend. What this means for buyers. For prospective homeowners, the Great Reset can be a window of opportunity. More choices. Buyers are no longer competing in a frenzy where homes disappear within days. Negotiation power. With longer market times and increasing inventory, buyers can negotiate better terms and avoid overpaying. Strategic timing. Waiting a few months may yield a lower price or better financing options as the market stabilizes. However, buyers must remain vigilant. While the reset may temper prices, it doesn't guarantee permanent declines, particularly in markets with limited supply or high demand. What this means for sellers are facing a new reality. The market is no longer entirely in their favor. Pricing strategy matters. Overpriced homes sit longer. Accurate pricing, professional staging, and clear marketing are crucial. Patience pays off. Unlike the previous seller's market, homes may not sell immediately. Sellers should be prepared for slightly longer listing periods. Incentives and flexibility. Offering incentives such as covering closing costs or flexible possession dates can attract buyers in a calmer market. The reset forces sellers to adopt more strategic and data-driven approaches rather than relying solely on market hype. Investment implications. Real estate investors, both domestic and international, are paying close attention. Rental properties. With higher borrowing costs and potential price moderation, rental markets in major cities may become more attractive for investors seeking steady cash flow rather than capital gains. Value investing. Secondary cities with growing demand offer opportunities for long-term appreciation. Caution required. Flipping homes for quick profits becomes riskier. The reset favors long-term planning over speculative short-term gains. Policy and market interventions. Governments and regulators are also influencing the reset. Mortgage stress tests. The ongoing enforcement of stress tests ensures buyers can withstand interest rate fluctuations, reducing risky borrowing. Incentives for first-time buyers. Programs like the First-Time Home Buyer incentive in Canada help mitigate affordability pressures, but also moderate demand. Urban planning and zoning changes. Cities like Calgary and Edmonton are streamlining approvals to increase housing supply, further influencing price stabilization. These interventions collectively reduce volatility and encourage a more sustainable housing market. Looking ahead. What comes next? While the Great Reset may seem alarming to some, it is part of a natural cycle. Markets that grew too quickly often need a correction to achieve equilibrium. Here's what experts predict for the next phase. Gradual stabilization. Prices are likely to flatten over the next 12-24 months before resuming moderate growth. Increased mobility. Canadians may continue moving from expensive urban centers to mid-sized cities, maintaining regional variations in price trends. Shift in buyer behavior. Affordability pressures will encourage smaller homes, multi-unit dwellings, and urban infill projects. Investor adaptation. Rental demand and long-term investment strategies will become more prominent. In short, the market is entering a phase of balance. Less frenzy, more choice, and smarter decision-making for all parties involved. Conclusion. The Great Reset of Canada's housing market is not a crash, nor is it a bubble bursting. It's a strategic recalibration that reflects higher interest rates, rising supply, and changing buyer priorities. For buyers, it presents opportunities to enter the market with negotiation power. For sellers, it demands strategy and patience. For investors, it highlights the importance of long-term thinking and regional market analysis. Ultimately, this reset signals a mature, stabilized housing market, one that may finally align prices with sustainable growth, affordability, and economic reality. The question is no longer whether Canadians can afford a home. It's how they navigate this new, more balanced landscape. Next steps for Canadians. Track local inventory and price trends. Get pre-approved for mortgages to leverage negotiation power. Explore secondary cities for affordability and growth opportunities. Monitor government policies and incentives affecting housing. The Great Reset is less about fear and more about opportunity for buyers, sellers, and investors alike.